Well, welcome back to the Undervalued Investor YouTube channel, where today we're talking about tech companies, specifically Apple crashing on the very first trading day of 2024. We're going to talk about where Apple currently sits and the likely outlook for the continued year, which isn't as bright as it once was, in Apple's past. We can see they're currently just trading under $3 trillion, still a wicked high price to earnings multiple of 30, with very little growth expectations this year. And that's one of the reasons that the stock dropped. I also want to point out that the stock is dropping after recently just hitting an all-time high coming into the new year, and then is now trading down about 5%. Taking a look, a lot of people are anticipating that this is coming from a lot of downgrades from Barclays. They're claiming that there's going to be a slowdown. They're seeing slowdown in chip sales and a lot of other things related to the iPhone 15. They're also seeing they're downgrading a lot of things, including citing regulatory scrutiny as one of the factors. iPhone sales have been worrying some analysts and investors since at least October, and we're seeing that in their sales. I mean, this is the first time in Apple's entire history where the stock's continually been running into all-time highs, yet sales have been more or less declining. When we take a look at total net sales, we can actually see over last year from 2022 to 2023, they've declined slightly by about $500 million, give or take. But when you take a look at the 12-month, again, keep in mind, this is based off the September earnings. We're not going to see Apple's Q4 earnings, which is going to be very enticing to how the stock's going to react. But Q4 earnings are going to be at the end of this month, January. I think it's just coming into February. But we can see from 394 billion to 383 billion is a pretty large decline. And considering they've been able to do some cost-cutting measures, they've been able to keep their gross margin roughly intact. So most of their actual gross margin is relatively unchanged. But if we take a look at how this kind of breaks down and you scroll to the bottom here, you can see almost every major segment has been declining over the year. iPhone sales, MacBooks especially. I mean, you take a look at iPads, also down. Wearables, home and accessory down quite a little bit here as well. And the only thing that's doing well is services. So services is where a lot of the attention is going to be, because it's the only growth vector they currently have. Unlike a lot of other companies like Amazon, I mean, you got Google and Meta. They have a lot of cloud services that have been growing at an exponential rate, which is something that Apple hasn't been able to tap into, I think, as cleanly to some extent. And also from an asset to liability standpoint, Apple's been doing a lot of share buybacks. We're going to take a look at charts that'll clarify this much better, but $352 billion in assets and a whopping $290 billion in total liabilities. This is much more liabilities than Apple has had in the past. It looks like they are trying to pay them down over last year, however, but still, these are pretty extensive compared to a lot of the other S&P top 10 companies on an asset to liability standpoint. But if you take a look again, revenue actually hasn't been peaking basically since 2022, the third quarter of 2022. It's been pretty much a decline for a straight year in their revenue. You take a look at their earnings per share, and their earnings per share has been relatively flat, but starting to bump up a little bit. And this is mostly based on share buybacks. Apple does an incredible amount of share buybacks. And this leads to higher earnings per share, because if they're taking more shares off the table, that means every earnings per share is just worth more. And if this is something that Apple continues to do, it's likely they're still going to see pretty good, reasonable growth within their earnings per share. But I mean, this is all just signs of a stagnating market for Apple. And something tells me it'll be relatively short-lived, probably just an example of the tougher market environment as people stick with their MacBooks and their iPhones for a bit longer. But it'll be neat to see how this continues moving through 2024. And I think Apple's going to be one of the more intriguing stocks from an entertainment standpoint to pay attention to. But I'll pass the question off to you. I'd love to know what you think about Apple in that comment section below.